Hello everyone and welcome to today's session. So today we are going to continue the discussion on chapter number 2. I hope you guys have gone through that what we have discussed till now and you guys have read the chapter till now. If anyone has any doubt before we proceed to the next standards, if anyone has any doubt, I would request you guys to ask. Please ask your doubts. Any doubts? Any doubt, guys? Any doubt? For whatever we have discussed in the last lecture or previous to that on any of the topic that we have discussed. So I hope you guys have gone through essay 240, 250, then we discussed 260. So you guys are clear on those standards? Yes, no? Okay, fine. If I assume no doubts, okay. If no doubts, then can anyone quickly summarize what was 250? What is there in the standard 250? SA 250. Can anyone quickly summarize for me what we have discussed? Anyone? No? You guys have not gone through the particular chapter? See, it is very important for you guys to go through the chapter. Trust me, then only you will be able to understand what we are being discussed. We are discussing over here. So anyone who has gone through the chapter and who can tell me about SA 250, what we have discussed in SA 250? No one? Okay, no issues. So I'll provide you the summary once again. See what we have discussed till now. We will go through the study material, and from there we will quickly go through a summary of whatever has been discussed. So we started with SA 240, the auditor's responsibility relating to a fraud in an audit of a financial statement, where we discussed about what are the objectives of the auditor. Okay, when it comes to the fraud, what auditor has to do. For example, we discussed about how auditor is required to respond to the risk of fraud in case of the planning. For example, we have to discuss with the team members. Then we discussed about the presumed risk of fraud in revenue recognition. We discussed about management override of control. We discussed about more onto the fraud risk factors. We discuss about what are the audit procedures with respect to the management override of controls the auditor must have. Okay, we discuss what to do when auditor identified how to respond to the fraud when auditor identifies the fraud, or it has like there is a suspicion that there is a suspicion that there is a fraud. We discussed that in SA 240. Okay, we discuss in SA 250 we discuss about the two type of laws and regulations. One, that they have direct effect. One, other laws and regulations. We discuss auditor's objective with respect to both of the laws, where one, you require a kind of positive assurance with respect to the compliance. Second, where you need only to check if there is a non-compliance, kind of a negative assurance. Third, how to respond to the non-compliance or suspected non-compliance. Okay, we at that time also discuss about the NOCLAR once again that we have discussed in the professional ethics. Okay, then we went to SA 260 where we discussed about communication with those charged with governance. We discuss about the matters with respect to the ethical requirements and the independence. We discussed about the significant matters that are required to be communicated. We discussed what to do when management and those charged with governance are same. We discussed about it should be in writing, the discussion or the communication. It should be two-way, effective communication. And we discuss about the auditor's objective with respect to the SA 260. So that is something We have discussed till now in 240, 250, 260. Okay. Any doubt in any of these standards? Anyone has any doubts? I take this as a no. Okay, fine. Now we will go for SA 299. That is a joint audit of a financial statement. Okay. Can anyone tell me what do you mean by joint audit? Basic question. What do you mean by joint audit? Anyone? What do you mean by joint audit?
Good evening, sir.
Yep.
Yes, SE 299, joint audit of financial statements. When two or more auditors join together to perform and conduct the audit of the financial statement of the particular entity is called joint audit.
Yep. Great. Yes, Geet, where one or more auditor is appointed to conduct the audit. Yes, Chitra, audit done by two or more auditors. Okay. So, joint audit is where you have more than one auditor. Okay. More than one auditor to conduct the audit. Now, the question comes is what are the objectives of the auditor when it is the joint audit? And what joint auditors have to do in case there is a joint audit. See, this particular standard, okay, is not applicable when there is not a joint audit. So if there is a single auditor, there will be no joint auditor, no joint audit, and this standard will not be applicable. So this standard is applicable only when there is a joint auditor. Now the question comes is that, let's say for example, I am the auditor of a company, that I am doing the audit of a subsidiary entity. Now there is an auditor who is a principal auditor or who is a group auditor. For the purpose of consolidation, he is relying the work performed by work performed by me. So he is using my audit for the purpose of audit on the consolidation. Will you apply standard this particular SA 299 in that scenario? Will you apply SA 299 in that scenario?
No,
No,
sir. The
sir.
branch audit and the component audit is not a joint audit because their responsibility is different and they are appointed separately. They are not auditing together for the particular financial statement.
Okay, great. Yes. So in that particular case, the joint audit will not be applicable. The standard on the joint audit will not be applicable. Reason because that is separate. That is using of work of another auditor, not the joint audit. Okay. So this standard will be applicable when there is a pure joint audit, like two auditors signing audit report on a financial statement. Okay. So they are issuing the audit report, joint audit report, okay, that we will discuss in the end, that they are issuing the joint audit report on a financial statement of a company. Now we will understand what are the objectives of the auditor when it comes to the joint audit. So here we have the objectives of the auditor. So the first one is to lay down broad principles for the joint auditors in conducting the joint audit. So this is standard says that the objective of this standard are to lay down the broad principles for joint auditors. Second, to provide uniform approach to the process of joint audit. Third, to identify distinct areas of works and coverage thereof by each joint auditor. And fourth, to identify individual responsibility and joint responsibility of the joint auditor in relation to the audit. So if you see, the first objective is to lay down the broad principles. Second, to provide approach. Third, distinct areas and the coverage. And the fourth is responsibility. So if I summarize all these things, broad principle, approach, then areas, okay, and you can say individual and joint responsibilities, okay. So identification of responsibilities, okay. Now if I talk about this particular part, if these particular items one by one, okay, this standard will be a guiding factor. This standard will become a guiding document for them that how to conduct joint audit. So if you see, it provides the way to conduct the joint audit, okay, like how to actually conduct joint audit, okay. Now when I talk about broad principles, that okay, to lay down the broad principles, so can anyone tell me, when you do a joint audit, let's say you and your friend, who, if you both are chartered accountant, you and your friend have taken a joint audit of a particular company. Now, what will be the first thing you together, like you with your friend together, you will decide on the audit? What thing you will decide? Practically tell me on the ground, what are the things you will decide when it comes to the planning part of that audit? Let's say you and your friend, both CA, have been appointed as an auditor of a company to conduct a joint audit. Now what are the things that you will discuss, like you will discuss with your friend, okay, in order to decide the planning of the particular entity, or how you will do the planning with him? Anyone? Some area, something that you will discuss together, something you will decide together, any example that you will do physically, like practically on the ground?
Yes, sir. First, the first thing, it will involve all the joint auditor together will discuss their overall that joint audit plan. What is the timing, nature, and also the work area division. What are the each auditor what they will do that audit, work allocation,
Mm-hmm.
and what are the area is not divisible. They'll say example, when it comes to presentation of the financial statement and disclosures, all these things are there. It will
Mm-hmm.
be jointly, it will be considered, and um, they will decide the work division, all these things, the timing and nature. They will develop the overall audit, joint audit plan, sir.
Yes, very good. Uh, Very good, Geet. How many resources are required? Identification of nature of entity, environment, bifurcation of work, division of areas. Very good. Very good, Chitra. Financial statement elements to be allocated for checking. See, when, let's say for example, if I am, allocated a joint audit and I am there with my friend, first thing I will discuss is what are the timelines. Okay, how much work we need to do. Like in case of, let's say, execution, we will decide in the planning. Okay, what is the work we need to do, how much time we need to provide, and we will agree upon certain dates. For example, this is a date when we will start execution. This is a date when we issue a report. This is a date when we are targeting to close the audit. We will first discuss on the dates. Do you think is it feasible to close audit on by this period? He said, okay, let's close this by 1 month. I said, fine, 1 month is a good timeline. Number two, now, how many resources are you bringing on the team? How many resources I am bringing on the team? Number three, what experience you are carrying or your team is carrying on the assignment? What experience my team is carrying? Do I have any experience of the industry for which I am going to do audit? Do you have any experience or your team about this particular industry? So that we can, share those experience and we can learn from each other. Number four, that with respect to, do you have any information with respect to the entity which you would like to share with us? Or if I have something, I will share with you. Okay. So these are certain things that I will discuss with him, at the time of planning. Also, I will discuss with him, okay, let's conduct some interviews. We will bifurcate between, like, okay, these are the interviews that you should conduct. These are the interviews that I will conduct. And then whatever information we will gather, we will exchange with, each other, and we'll see what to do. So these are certain things that, I will discuss with my friend. Now the question comes is, what standard says. This is something I will discuss, but what standard says. If you see, the standard also says the same thing, that first of all, the engagement partner and the other key team members from each joint auditor shall be involved in the planning. Okay, you involve everyone in the planning. Number two, establish a overall audit strategy. Create a audit strategy that decides the scope, timing, and direction of the audit, that guides the development of the audit plan. And before starting the audit, develop the audit plan. That is what standard says. First thing is, involve everyone, decide the strategy, which is scope, timing, and the direction. And then you basically develop the audit plan. Okay. And accordingly, you move ahead. That is what standard says. And that is what we have discussed. Okay. So whatever you will do on ground, that is the thing, standard will say you, like that. That's the only thing, people do what standard says. And practically, that is also the thing which is required to be followed on the ground. So basically, when you will start a joint audit, at that point in time, you will understand, first thing is, who all are required to be involved, the team, the joint auditors. And then second thing comes is developing the strategy. When I talk about strategy, it is the direction. Within 1 month, we have to close the time. Okay, we have 1 month of time. Third is the scope. What are the areas we need to cover? Okay, for example, we need to cover standalone audit. We need to cover both consolidated and standalone. Third, it may be an entity where you don't have a cash flow statement. So there are scenarios that you will discuss. What is the scope? What is the nature of the financial statement? Okay. See, now when I talk about SA 299 joint audit, you will also apply these principles not only when there is a statutory audit, but you will also apply these principles when there is a special purpose framework being adopted for the audit and for the financial reporting. So you are auditing for a financial statement which are prepared as per the special purpose framework. Okay. We will see when we will discuss that particular part also later on in chapter number 8, special purpose framework and all those stuff. But as of now, understand that it is not only for the statutory audit, it will be applicable wherever there is a requirement in case of the audit. Audit can be statutory audit, audit can be, let's say, joint tax audit can be there. Plus, there could be one, audit, joint audit with respect to the special purpose framework. So, at every place, this standard will be applicable. So at that point in time, it becomes important for you to understand the scope of the audit. What is there in this audit specifically? And that's the way you will decide the strategy, overall audit strategy. So when you decide scope, timing, and direction, that will become your overall audit strategy. Yes, the document when I talk about overall audit strategy is very detailed. Okay. But this is how it's there in the overall audit strategy. Once you have the strategy, on the basis of that, you will decide the audit plan. Can anyone tell me what is the difference between audit plan and audit program? Difference between audit plan and audit program. Anyone? Anyone? Difference between audit plan and audit program? No? Okay, tell me, what do you document in an audit plan? When I talk about audit plan, what are the things that you document in that?
Sir, audit planning is the scope and time and nature and resources, how we are going to utilize. And with respect to joint audit, it has to be, say example, two joint audits there. What are the area work allocated between them, and it has to be agreed and in the written and agreed and signed, and also it has to be communicated to the management as well. So then only they will exactly know what work they are going to do, because the timing is important, because one joint auditor is going in different timing. Both joint auditor going in the same time and working and sitting and doing the audit, it's very difficult for the client is concerned. So it is very important to fix the timing for each and every joint auditors. It is most appropriate to discuss with the management. So the audit plan will cover all these things. Audit program is different. Actually, the how we are going to actually execute the each and every item, whatever they planned in each auditors. See what are the area they are going to cover, what is the timing, which resources they are going to use it, what time, and all these things. Whether management is discussed and agreed accordingly, they will go and execute the audit program. Program is very important actually for execute that audit plan.
Okay. Yes, good. See, when I absolutely correct. Yes, Lavanya, very good. Audit plan is regarding allocation of resource time, and audit program is more on the execution. Yes, very good. Yes, Geet, absolutely correct. So, when I talk about audit plan, okay, it is more on to with respect to the overall planning that is you are doing for an audit. When I talk about audit plan, it helps you to discuss, help you to decide how and what the program will be. Audit plan is something different than the program. When it comes to the audit program, it is more detailed. It is kind of a detailed plan or detailed thing document, you can say, which covers all the part of the execution, how, when, what, at a certain level, that what you are going to do when it comes to the execution. Okay, so that is audit program, that for each and every area at the assertion level, I have everything documented. That is a program. For example, this is the area, this is the risk, let's say revenue recognition. So there is a fraud risk. Okay, now for this fraud risk, this is the inherent risk. For this inherent risk, I have these three controls. These three controls, I can have a control risk in front of that. Again, that control risk is based on some different things. Okay, so that is there. Now based on that control risk, what will happen is, now then I will have the overall audit risk in that area, plus I will have what substantive I am doing, how much comfort or evidence I will be getting from the substantive. So everything is documented in a detailed way in a particular audit program. But when I talk about audit plan, it is a detailed document, although it's also a detailed document, okay, but less detailed than audit program. And it is kind of a overview. It is kind of an overview which will talk about, okay, what to be done, when to be done, who will do on a overall level. On a very overall level, that is decided, that is the audit plan. In case of the joint audit plan, the plan is necessary so that each joint auditor can develop their program, and then they can combine their program. Once they will develop their program, they will combine the program, and accordingly a combined program will be then executed. Okay, so that's why a audit program will be there if you have an audit plan. And audit plan is something decided on the audit strategy, overall audit strategy. I will show you one document. Uh, you can say draft audit plan. It's a example audit plan which is there, and this is with respect to an IFRS related entity, but that is fine. You can think of like the same way it will be applicable for an Indian entity. So this is an audit plan for a particular entity. Okay. Now what you have the executive summary of that particular entity. Then you have the audit objectives. What are the audit objectives over here? Then scope of audit, what you are going to do audit, what are the standards that you are going to follow for the audit. For example, financial position, statement of P&L, comprehensive income, statement of changes in equity, statement of cash flow, other accompanying notes. Let's say, for example, this is not a company where NDS is applicable. In that scenario, this will change. You will not have statement of changes in equity. You may not have statement of cash flow based on the exemption of MSME classification. Okay, there is a MSME classification as per the applicability of the standard for non-corporate entity. At that point in time, it might not be applicable. Again, other comprehensive income might not be applicable. So you need to see what is applicable. Okay, so this scope will be based on the type of entity and financial reporting framework. Okay, then you document a bit of understanding of the entity and its environment based on preliminary information. Okay, like what is the business operations, industry factors, regulatory environment, internal controls, what they have, then you have a very overall or overview of risk assessment. Okay, for example, revenue recognition, inventory, goodwill impairment, foreign currency. These are decided based on the last year FS. Like, you take a last year FS or draft trial balance for current year, and you try to understand what are the overall higher risk of material misstatement areas. Then you decide what is the risk. Then you decide what could be the planned approach. This is the planned approach, not the program. Based on this approach, you will develop a program. Okay, based on these approach, you will develop a program. Then materiality, what could be the materiality, audit approach. This is not the materiality. This is only determination of benchmark that you do in your audit plan. You decide what would be the appropriate benchmark for your materiality. This is not the determination of the materiality. This is only determination of the benchmark, which is one of the prime steps in determining the materiality. Audit approach, like, okay, we will employ a combined approach, that is TOC plus TOD. Reliance on internal control, use of specialist if required. So you decide like whether you will be requiring specialist or not. Then audit team and resources, who are going to be in your audit team: manager, senior, IT specialist, valuation specialist, partner. If required, then engagement, quality control, reviewer. Okay, EQCR. You will also require a EQCR. If required, then you have one more signing partner. So there are at times there are two signing partners. Okay, two signing partners are there. Then you will decide, okay, these are the two signing partners. You may have one additional partner for review. So review partner. Yes, there are scenarios when you have an additional review partner because the entity is a high risk entity and the entity's operation and audit is very complex. You decide a brief timeline of the audit, planning, entering, field work, completion, and accordingly, you decide all these things. Communication plan, that we will have a weekly status meeting, formal communication, final presentation, plus what is the overall audit budget, everything. Like, these are the things that you will document in your plan. Okay, these are the things that will be documented in your plan. So first, you will decide an overall audit strategy, which will talk about scope, timing, direction. On the basis of that, you will develop a joint audit plan where you will identify division of areas, common audit area and the separate audit areas. You will ascertain the objective of the engagement, reporting objectives, and nature of communication required. So, reporting objectives in our example, if you see here, this is audit objectives, and these are the reporting objectives. So, here you need to express opinion on the financial statement. Tell me, will this will be applicable in case of non-corporate entity? Do you think this will be applicable in case of non-corporate entity?
No, sir. No.
Okay. No. Any other answer? Whether this will be applicable if there is a non-corporate entity? How many of you say yes? How many of you are saying yes for this? No one? So most of you are saying no? Geet, you are saying yes. Shitra, you are saying yes. Anyone else? That's where you need a plan. We have written, assess the effectiveness of the internal control over financial reporting. Yes, we will assess. Why not? If they have the control, if it's a non-corporate entity, then it has to be assessed. Now the question comes is, if instead of assessing, it was reporting on the effectiveness of the company's internal control over financial reporting, then I would have said no. There is no need for reporting because it's a non-corporate entity. This requirement is under the Companies Act. But when I talk about assessing, yes, there is a requirement for assessing. If you are saying that, okay, I will, take a comfort, I will use the control test of control evidence to issue an opinion. Why not? You have to assess. If you are going to use this as an audit evidence, the outcome of the test of controls, then yes, you need to assess. So assessing is different, reporting is different. That's why you need to understand what are your objectives when it comes to the audit, whether assessing the internal controls or whether reporting on the internal controls. To report, you need to assess, but assessing doesn't mean reporting.
Right.
So understand the reporting objectives. This is very important. Understand the reporting objectives, and that you have to document in the engagement plan, and the nature of the communication required. For example, in our plan, we decided, okay, this is the communication: weekly status meeting, formal communications, final presentation. You think, like, this could be very like, who does a weekly status meeting? Trust me, when you go for an audit of a listed entity, this is a requirement of audit committee. This will come from audit committee that I want, and they want a weekly status meeting. They want monthly formal communications. If the audit period is, if you are saying that the audit will last more than a month, final presentations, these are the things that they require before you finalize the audit report. So at that point in time, if you'll say no to audit committee, okay, we are not going to provide weekly status meeting, They might not be comfortable with that. They might say, okay, if we are not aware on the progress of the audit, we are not comfortable, and this is not how we are expecting the auditor to work. So you need to understand what is your communication plan, what is the expectation with respect to the communication with those charged with governance. There was one point in SA 260. Can anyone tell me with respect to the audit plan? What was that plan? What was that point?
Audit plan to be communicated to the management and to charge with governance, timing and nature and resources. They have to discuss with them, and it has to be agreed.
Absolutely correct. Very good. See, this is where from it is coming. The auditor shall communicate those charged with governance an overview of the planned scope, timing of the audit, which includes communicating about significant risk and identify the auditor. So you have to communicate with them planned scope and timing of the audit. Okay. Plus, we are talking about two-way communication with them. Everywhere we discuss about promote two-way effective communication. We also discuss about provide timely observation arising from the audit. You can only provide timely observation arising from the audit. Timely is when you do a frequent communication with them. Frequent communication, effective two-way communication. To achieve these things, you need to decide what to be communicated when. And for that, you need to ascertain in your plan the nature of the communication required. Plus, you need to understand communication among all joint auditors. For example, I conducted an interview. I have that now information. Like I did the planning activity. Now I have that information. What should I do with that planning, that information? Should I keep it with me only? If I keep it with me, it will be of very less use. I have to inform to my team members. Let's say, for example, I had a discussion with the marketing head. Marketing head told me that okay, there is some issue going on in the procurement department. The marketing head heard that they identified some fraud. Now let's say procurement is handled by the another joint auditor. I have that information that there is an issue in the procurement. I am handling marketing sales side. They are handling procurement and purchase side. So when that information came to me, if I sit on that information, it will be of no use. I have to provide that information to my joint auditor so that he can include that information in his risk assessment. So you need to decide how I will communicate. And I'll tell you one of the example. So all the joint auditors decided they will communicate weekly. Fine. They conducted the interviews within the week itself. Okay. So I conducted the interview, let's say on Monday with the marketing personnel, and they conducted interview on Friday with the procurement head. On Saturday we met. I provided that information. Do you think that information is now useful? Do you think that information is useful now? Very good, Geet. Only one answer. So if you are not answering, then I will consider your answer as a yes, that information is useful. Okay, that would be fine. How many
Yes,
of you
sir.
say yes to that? That information is useful. How many of you say yes? Most of you say yes. Very good, Chitra. It is not. I conducted my interview on Monday where I had an information about fraud in the procurement. That team, another joint audit team, conducted on Friday. By that time, I already had that information, but I did not provide. I waited for the weekly meeting. By that time, I'm not communicating on timely basis, and they lost the chance to discuss with the procurement guy. Not useful at all. It will lose its relevance. Very good, Keith. Yes. So communication is not important, but timely communication is important, and that you need to decide at the time of the audit plan itself. Consider the results of the preliminary activities, preliminary kind of interview that I'm talking about. You need to consider the information that you have received, ascertain the time, extent, and nature of resources necessary to perform the engagement. Just now we saw in the audit plan, this is the resources, okay, there in the audit plan. Sometimes what happened, there is one scenario. Let's say I have a IT specialist in firm. So this is part of the firm only. Now let's say my firm has 3 to 4 partners. Every partner is doing 2 to 3 audits. Okay, we have one IT specialist. Everyone has reached out to the IT specialist that I need you for an assignment. Obviously he will not be able to devote time at every place. So he gave me this particular time. I will be available, let's say, from 10th November to, let's say, 15th November. He was only available for these 5 days for me. For the rest of the days, he was on the other audits and everywhere. Now, if IT specialist available is on 10th and 15th, my plan was, 15 to 30 was testing of internal controls. Then in that case, I need to make sure that before I reach on 10th, I have data ready for this IT specialist so that he can do his work. Similarly, valuation one. If let's say he's an expert valuation hired outside, he may not be available on all dates. So you need to plan accordingly on which date who is available and how can I structure my audit plan so that I can have that detail before that person onboards. Okay. So you need to ascertain the timing, nature, and the extent of the resource necessary to perform the engagement. So if I summarize the joint audit plan, it will contain areas, it will contain reporting objective plus communication, it will contain your communication again in the case of joint auditor or among auditors. Then it will contain results of the preliminary engagement activities. So, initial activities, I will say, result of initial activities, and then nature, timing, or extent of resource. So these are the things that are minimum required in your joint audit plan. Clear? Any doubt? Any doubt till now? Any doubt, guys?
Clear, sir.
Okay, no doubts. Good. See, this is just one part. I'm talking about broad overview. If you see, this is just laying down broad principles for the joint auditors to conduct the joint audit. We are still talking about broad principles. That's it. Now we will go on to the responsibilities. We will discuss on the areas, uniform approach. But this is just broad principles. That's it. Okay. Now the question comes is if this is a broad principle that we are talking about, okay, When it talk about uniform approach to the process of joint audit, can anyone tell me what is uniform approach? I mean, like what uniform approach could be over here? What do you what standard, when a standard says uniform approach, what it means?
Sir, it is a unique approach. Means for every audit there will be different approach. So that's why it is called uniform approach.
Okay. Okay. Anyone else? What is uniform approach? Standard process for joint audit, yes. But the question is, why do we require a uniform approach in case of a joint audit? Why do you require a uniform approach?
Sir, when there is a single auditor is appointed, then uniform approach is not needed because they can have the discussion with the management and they can allocate the time and they can provide the audit work. When there is a joint audit is there, then
Mhm.
approach should be the uniform. The reason is that the nature and timing is very, very important for the joint audit. See, the work allocation may be between among the joint auditors. Their approach should be uniform so that it will be easy for the client to coordinate with the audit plan and audit
Mhm.
program. So it is very important to follow the uniform approach across the joint auditors.
Okay. Okay. Anyone else with respect to uh, uniform approach? Can anyone give me example of, like, if we don't have a uniform approach, what will happen, to provide a base so that joint auditor can agree upon? Okay, fine. I'll tell you when it comes to the uniform approach. Okay. Now, when I talk about uniform approach, let's say, for example, in my document, that example document I showed you, I have a materiality where I'm talking about 5% of profit. Now, joint auditor A took 5%, joint auditor B took 10%. Do you think it is appropriate? Yes, Keith, very good. If a joint uniform approach is not adopted, it can result in a chaos. Simple example, if here the materiality is 5% and if there the materiality is 10%, means higher the materiality, higher the, there is a concept. If you have a materiality level higher, that means
Higher audit evidence will be required.
no, lesser the audit evidence is required. Because if your materiality is higher, that means a lot of items will be classified as non-material items. Materiality threshold means if anything goes beyond the materiality threshold, then I will look into that. If my materiality level is higher, I require less audit evidence. Because let's say, for example, earlier my materiality level was 1 crore. Anything beyond 1 crore is material for me. Let's say if I increase to 100 crores, now the material misstatement which were of 5 crore will become a non-material misstatement. For a non-material misstatement, I do not qualify an audit opinion. Do I? Do I qualify for a non-material misstatement?
No,
Yes or no?
no.
So if I increase my materiality, what will happen is I would require less audit evidence. And if I decrease the materiality, everything will become material and I need to do more testing, more audit evidence. Yes or no? Correct? Now,
Yes.
do you agree till this? Now, if I talk about this particular scenario, auditor B is doing less audit. Auditor A is doing more audit. Now, let's say, for example, he also has risk of material misstatement. He also has risk of material misstatement in his audit plan. Can you combine the results, testing results from both of the auditors? No, you cannot. Simply, you cannot, because one has done less testing, other has done higher testing. I cannot say that based on the less testing, everything is fine. Because when I will apply the 5% on this testing, I have a lesser audit evidence. So for joint auditor A, the work performed by joint auditor B will not be of relevance, and that will create a problem. That's why we need a uniform approach. Okay, and this uniform approach plus this broad principles you get when you decide joint audit plan. When you prepare a joint audit plan, you get to know about this uniform approach and the broad principles. Because in joint audit plan, you discuss all these things: areas, reporting objective, communication, result of initial activities, nature, timing, and extent of resources. You discuss everything. And after that only, you basically say that, okay, fine, now this is something, a plan is there, we need to work accordingly. Yes or no?
Yes, sir.
Yes, sir.
Now, once you have a plan in your hand, you execute that plan. And while executing that particular plan, you decide, okay, I will decide with my friend, okay, now this is a plan. Based on this plan, these are the 3 areas that you will do, or these are the 3 areas that I will do. And how we decide is not something random. The decision of testing depends upon the audit team and the resources. Simply, for example, I will say I don't have an IT specialist in my team. I have valuation guy. He will say, no, I have an IT specialist. Okay, fine. If you have a valuation guy, I have an IT guy. I will bring IT guy. So IT goes into his bucket. Valuation comes into my bucket. Then I will say, okay, I have an engagement partner with 20 years of experience. He will say, okay, my engagement partner, like, if there is anyone else, will be of 15 years of experience. Fine. He will say, I have an audit manager who is from a very good reputed firm. He has experience of 12 years. I will say, no, my audit manager is very new. So let's make your audit manager as a audit manager for all the teams. Then same way, seniors based on the experience. I will say my senior is good in fixes that. He will say his is good in revenue. We will allocate the area. So based on the resources, time, availability, we will decide who will do what. Once you decide who will do what, at that point in time, you decide the areas that are assigned to each of the joint auditor. Okay. Now the question comes is that once I decide the areas, what happens next? Each one go and do their planning and their risk assessments and everything. Now, at time of a planning or risk assessment, you conduct interviews, you will share the details. We saw that. You also obtain a document from the management called written representation letter. Written representation letters. Now, at times, management provides a combined written representation letter. Okay, at times, management provides a combined written representation letter, and that is fine. That is to be shared with all the auditors. That is fine. Now, similarly, there is another important document which is shared by management, which is engagement letter. Do you think in this scenario we can have a common engagement letter for the appointment of both of the auditors? Do you think it would be appropriate to have a common engagement letter, or we should have the separate engagement letters for the appointment of both of the auditors?
Common engagement letter, sir, for all the joint auditors.
Okay, very good. Yes. So, common engagement letter is the thing that is required. The reason because let's say if you issue a separate engagement letter, in others auditors engagement letter, if there's a change in the some responsibility or change in the financial reporting framework, what you will do? So that is not appropriate. As a result, a common engagement letter is always preferred to maintain the uniform approach, and this is for the uniform approach. So to maintain uniform approach, you start with a common engagement letter, and then you proceed towards the all the things of audit. Now, this is a document. Let's say, for example, this document is there. Whatever we have discussed in this document is there. That is the audit plan for Innovate Incorp. If I prepare this document, if I share with the another auditor, okay, he reads this document, would it be sufficient? If I share this document with another auditor, let's say, for example, the another joint auditor is not having any comments with respect to the changes. He says everything is fine is in the document. That will be sufficient?
No, sir. Oral communication is also required.
Sir, actually, the audit planning should be prepared along with all the joint auditors and the relevant team also involved while preparing it, and also it has to be agreed between them, and it has to be documented and signed.
Very good. So it's not something I have to prepare alone. I have to prepare together with other joint auditors, and it has to be documented and signed that he accepts this audit plan. It has to be signed. Till that time you don't have this signature, how would you demonstrate that this has been accepted by another joint auditor? So this has to be signed. Remember that this document has to be signed, and you have to prepare this with the other joint auditors. So basically that we have discussed, like, joint auditors shall communicate, uh, auditor shall communicate to other joint auditors, document the overall financial statement level or areas among the joint auditors. So you document all these things, allocation of areas. Okay, you discuss the nature, timing, and extent of audit procedures for common and specific allotted areas, that what you are going to do. You should have a common engagement letter, common MRL. You should have a signed identification and allocation of work document. It should be signed, and the same shall be communicated to those charged with governance of the entity. So once you prepare this document, you send this document to the those charged with governance. This is how you develop a uniform approach and the joint audit plan. Any doubt? Any doubt?
Sir, I have one doubt.
Yes.
Related to materiality, like as you say, explained, when there is high materiality level, then less audit evidence will be required. In case of less materiality, higher audit evidence will be required. So in this, I want to know like how this materiality level is practically decided. Suppose a company is having 100 crore revenue, and we want to audit the revenue portion. So how the materiality level will be decided?
See, materiality level usually are decided based on the benchmarks. Now, there are multiple benchmarks. We will also discuss when we will discuss materiality, but I'll just for your information, there are multiple benchmarks, industry-wide benchmarks. For example, in some of the cases, I will take profit as a benchmark. Okay. So benchmark metric and the benchmark percentage, there are two things. So when I talk about benchmark metric, that is, let's say I will take profit after tax. In some cases, you take EBIT. In some cases, you may take, some other percentage of, some other way of profit. So earnings before interest, depreciation, and tax, something, or amortization, whatever it is, so EBITDA, whatever they want to say. So you decide first the benchmark metric. Then once you decide a benchmark metric, accordingly you apply a percentage on that. Let's say for profit after tax, okay, and this is based on the methodology that you develop. Let's say for profit after tax you have 5%. Now obviously it is understandable that EBIT number will be higher than the profit after tax, so you cannot have the same percentage for the EBIT also. Let's say your methodology says 3% for the EBIT, okay, or you have a range 2 to 3%. Again, EBITDA, again you are adding depreciation and amortization, a higher number, so it may be 1 to 2%. Sometimes some people take a benchmark of gross revenue, so they may have 0.5% of gross revenue. Okay, so based on the benchmark metric, you decide a percentage and then you apply, you get the overall materiality. From overall materiality, once you decide the overall materiality, you go for performance materiality. And there is one more item. Okay, some people call it, some level. Some people call it SAD level. That is, sum is summary or sum of uncorrected uncorrected misstatement. This is summary of uncorrected misstatement, and SAD is summary of adjusted differences. Both are same, like, if they are adjusted then SAD, if not adjusted then uncorrected misstatement. Now they have these labels based on the performance materiality to avoid those things. If they are, means they are very small. If they are below this threshold, very small, we will not consider. Okay, so you have this 2 or 3 tier materiality approach. Once you decide this materiality, based on that you start your testing. And these benchmark metrics are decided based on the industry. For example, startup, obviously for sure startup will have losses in the first years. You will not take profit after tax, EBIT or EBITDA. You may take some other benchmark which is relevant. For example, gross revenue. For example, fixed asset if it is a capital intensive, or if, let's say, it's the industry is a capital intensive industry where they don't have the, where they have the higher depreciation or amortization, not advisable to take profit after tax or EBIT. In that case, you may go for EBITDA. So again, depends upon, what industry is there, what is the appropriate benchmark is there, what is the benchmark percentage you are applying, that will define the materiality.
Yes, sir. Clear, sir. Thank you.
Sir, I have one query also. Sir, when there is a consolidated audit, that the principal auditor will fix the materiality and he will provide that material level to the each component auditor. This in joint audit, how the materiality will be fixed among between them, sir?
See, that's why I told you, like, there is a three-tier approach. Now, overall materiality, okay, when I talk about in our plan also, in draft plan, if you see, the materiality has two levels. One, I'm talking about overall materiality for the financial statement at 5%. Second, performance materiality 75% of
Sir,
overall
sir,
materiality.
sir, I am clear on what is the materiality level and what is the performance. Performance and materiality will be the lower than the actual materiality. So they will perform that limit. That's okay. But see here, say example, four joint auditors are there. In overall the financial statement it is concerned, is there any overall materiality is fixed upon which the each or joint auditor will perform their audit, or otherwise the each joint auditor will separately assess from their area? Say example, if the work is divided, like asset will check by one person auditor, liability is fixed responsibility for some other auditor, expenses given for some other audit joint auditor, revenue is given for some other. The materiality, how they will fix among them and how they will execute, that is my question. Is there any overall materiality is fixed upon which they will do their audit work, or each auditor independently assess the materiality on their portion and they will perform the performance materiality based on that? This is what
See,
my question is.
understand. There is, when you decide overall materiality, that will be one overall materiality. Each auditor will not decide overall materiality. Now, when it comes to the performance materiality, again they will calculate one performance materiality which will be given to each joint auditor. The purpose of the performance materiality is, if you identify multiple misstatements, the uncorrected should not exceed the overall materiality level. Now, for example, if I calculate a performance materiality here in 75%, let's say I calculate 50%, and I gave the 50% to each and every joint auditor, then the chances are very less that if they exceed the performance materiality, still they will not exceed in combined for all the joint auditors overall materiality. So 50% or something, whatever the performance materiality will be, I will provide to each and every joint auditor. Okay. Now coming to a specific materiality, area wise. Usually you do not have a specific area wise materiality unless it is a very special area and you want to do more testing because the risk is very high. At that point in time, you may reduce or have a special materiality for a specific area.
Okay, sir. The overall materiality will be based on that each joint auditor will do the performance or materiality accordingly.
No, not accordingly. There will be one overall materiality. There will
Okay.
be one performance materiality. That performance materiality will be followed by all the joint auditors. That overall materiality will be followed by all the joint auditors. They will not calculate separate performance or overall materiality in case of joint audit.
Okay. Which means that single overall materiality will be fixed and also the single performance materiality also fixed. Accordingly,
Yes,
each joint auditor will do their performance work.
yes. Because
Okay.
your underlying financial statement are one and only. Like there is only one financial statement. You cannot have different overall materialities for one financial statement.
Right, sir. Thank you. Got it.
Any other doubts? Any other doubts? Okay. If no doubts, then the third objective that we need to discuss is to identify the distinct areas of work coverage hereof by each joint auditor. Again, that is something again you have in the plan. This is part of again the joint audit plan areas. Now the fourth objective and very important, responsibility, individual responsibility and joint responsibility. Who is responsible for what? First of all, understand one thing. If there is an area that is assigned to me, I am responsible for that. So the individual responsibility for the areas assigned to that particular individual joint auditor. Okay. Now coming to the joint responsibility. Joint responsibility means where both of the auditors, or multiple, whosoever joint auditor is there, they all are responsible for that particular area. Now there are two type of these areas where you have the joint responsibility. Okay, two type of areas where you have the joint responsibility. One is the identified. Okay, one is the identified and one is kind of deemed. Now this bifurcation is not there in the standard itself. This is like something I have done, but it is for the understanding purpose. Okay, now when I talk about identified areas, this is for the identified areas, means areas where joint auditors say that we will perform work together. It's a common area. Okay, identified areas or common audit areas where they will perform audit together, joint audit together. When I talk about deemed, these are areas where if you have, even if you say that I am not responsible, he is responsible, still you will be responsible. Everyone will be responsible. So you don't have any, escape from the deemed areas, kind of. Now, what are these deemed areas? So these deemed areas are the areas where basically all the auditors will be responsible even when they do not, or they have assigned the responsibility to someone else. For example, which is given in your standard itself, is presentation and disclosure of financial statement as required by the applicable financial reporting framework. Irrespective of what you do, how much you allocate, when it comes to the presentation and disclosure of financial statement, the joint auditor shall be jointly and severally responsible for that. Okay. Second is audit report complies with the requirement of the relevant statutes plus standards on auditing. So when you are issuing audit report, it has to comply with the statutes and the standards, and their joint auditors again will be responsible jointly and severally. Even you say that at the time of planning that I am not going to look into the compliance of the statute over the audit report, that is his responsibility. Okay, then examining the financial statement of the entity complying with the relevant requirement of the statutory laws or statutes. Matters which are brought to the notice of the joint auditor by one of them, on which there is an agreement among the joint auditors. So these are certain areas, I would say, deemed. Deemed areas where they are jointly responsible. Joint and severally responsible for these areas. This is the decisions taken by all joint auditors under planning. Audit work which is not divided among the joint auditor is something is known as a common or identified areas. In deemed areas, even if you assign to a particular joint auditor, there is no escape. You are responsible. When I talk about common or identified areas, if you are assigned, or if you decide that fine, okay, we are jointly responsible, you will be jointly responsible. Clear?
Yes, sir. Clear, sir.
Sir, I have a question.
Mm-hmm.
So how are the joint auditors severally responsible for presentation and disclosure of the financial statements as required by the applicable financial reporting framework? It would be the responsibility of the management, I think, for the presentation and disclosure of the financial statements.
Okay.
Point
You will
E.
be responsible because you are issuing an opinion. Now, while issuing an opinion, if you do not disclose, responsible means is not something that you are held liable. Again, see, responsible means responsible for reporting on. So, if you are responsible means you have to report and look into that area. Presentation and disclosure of the financial statement. So, you have to look into that area whether they are complying or not. If you do not report
Yes,
appropriately, then you will become liable.
yes, you got it. Got it.
Any doubt? Any doubt?
Clear, sir.
Okay. If no further doubt, so this is a bifurcation of the areas that we have done. Now, when it comes to this bifurcation, okay, you will decide this bifurcation, and let's say you will do the audit. Hypothetical example. Okay. Now coming to the next part is, let's say you decided, okay, no, this audit report should comply with the relevant requirements. This one point. You say no, this audit report should comply, and as a result, I, like joint auditor A, basically, joint auditor A want to include an emphasis of matter paragraph, but joint auditor B says no. Joint auditor C says no. What they will do?
When there is a disagree among the joint auditor, that joint auditor, the B and C will issue the separate audit report. They will cross-reference to their other audit reports.
Very good. Yes. Very good, Geet. Very good, Chitra. Very good, Lavanya. Yes. So, what will happen in this scenario? Understand that they have to comply. They have to comply for the requirements. Now, as a result, when it talks about the compliance, there is a term over here which talk about jointly, okay, and severally. That means together and at individual level, they are responsible. So if they are responsible at the individual level, if they think that the audit report should contain this particular point, which others don't think, or they have a different opinion, it could be a scenario, they can issue a common audit report, and he can issue a separate audit report. Okay, joint auditor A can issue a separate audit report, B and C can issue a common audit report. Okay. Now the question comes is, when they issue different reports, what, like, obviously user will get confused. There are two reports. Whose reports to rely on? Now, who has to rely upon whose report? If they are both are issuing, then whose report to read. In that particular case, what is required to be done is the referencing. Yes, referencing is required. Now, where will you reference? That is very important. Can anyone tell me where you will reference in the audit report?
Other matters.
Yes, you will reference into the other matter paragraph. So both of the audit reports has to provide reference of the other audit reports in the other matter para. Okay, they have to provide under the other matter paragraph, and based on that reference, user will or the reader will understand. Okay, no. This is something a separate audit report. This is something a joint audit report. Another question I have: can they have different opinion? Now, as I talked about EOM paragraph. Let's say I'm talking about another example. joint auditor A, joint auditor B, joint auditor C. A says qualified opinion. B, unmodified opinion. C, unmodified opinion. Sorry. Unmodified opinion. A is saying qualified opinion. Can it happen? Two different kind of opinions on a single set of financial statement. Is it possible?
Yes, sir. Possible, sir.
Two different opinion on a single financial statement.
Sir, when there is a different opinion, here also that unmodified or joint auditor B and C, they can issue the common audit report. They can mention what is the unmodified the things in the EOM paragraph, the emphasis matter paragraph, and the joint A auditor will issue the separate audit report. So the both the common and separate, they will cross reference to each others.
Okay. Okay. So again, this is possible, not an issue. You have a common audit report and you have a separate audit report. Okay. And then reference in other matter paragraph. If you do that, fine. If you don't, then responsible, jointly and severally. Clear? Any doubt to this? Any doubt? Now, I'm talking about jointly and severally responsible. Now, let's talk about examining the financial statement of an entity comply with the requirement of the relevant statutes. Okay, this particular paragraph. Or this paragraph, financial reporting framework. Now, there are standards which require, let's say there are certain NDAs which require additional disclosures. Okay. Employee benefit related, or let's say credit risk related. A lot of standards are there which requires additional disclosures. Now, these disclosures are usually decided, okay, are tested as per the area wise. Let's say, for example, if I'm testing impairment, I will test this disclosure. I will see whether disclosures are appropriate or not. If someone is testing the employee benefits, they will look into their disclosures. At the end, we will say, okay, we have seen this disclosure. They will say this disclosure. Everyone will talk about their disclosures and everything is fine. They will issue together a report. Now, the question comes is how to rely, because you are jointly responsible. If, let's say, for example, you allocated at the time of, plan that these are the disclosures and the areas that will be tested by this auditor, and these are the disclosures and areas will be tested by this auditor, will you be able to rely upon the work that will be performed, or you have to perform again the entire work for that particular area
No, sir, it's
because you are
not
jointly
required.
responsible?
No, sir, it's not required because particular item is assigned to the particular joint auditor. They are responsible for the particular items. So other auditor is not responsible for overlooking and reviewing those items is not needed, sir.
But let's say this item is related to the disclosure, presentation and disclosure, that you have already discussed that, okay, you will look into this and I will look into this.
But when specifically is assigned to the particular disclosure, those people are responsible for that item. When it is specifically not assigned, then that case is that all the auditors are responsible jointly and severally.
Again, see, let's say, for example, hypothetical example, I'm talking about employee benefits, presentation and disclosure. Now, this was assigned to joint auditor A. He tested and said, okay, no issue, fine, good to go. Now comes to the joint auditor B. The question comes is, will he test presentation and disclosure again? Yes or no? Whether he will test presentation and disclosure again, because he is jointly and severally responsible. Will he test again?
No, sir, it's not needed because it's specifically assigned to the A on this case. It need not test by that B again.
So how I am making him responsible? If it is already assigned as per point number E, he is responsible. So on one side I am saying that he is responsible. On second side I am saying he is not required to test.
So on the audit planning itself, they will assign the responsibility and they will return down and they will sign also documented for the specific items. Even the disclosures will have the 50 to 100 line items. They segregated between them. The clear responsibility is assigned to that person. So it's need not required to review by the other persons.
Then what this responsibility means, what this responsibility is about. If I assign, then here the standard says that even after assignment, all joint auditors are responsible. Then what this responsibility is about? Okay, Geet. My question is, if I say that I assigned this particular area to another joint auditor, he agreed to it, he signed to it, he will do it. Then what this responsibility means? Somewhere near, Geet. Not exactly correct, somewhere near. What this responsibility is about.
Sir, this responsibility is about the presentation of the financial statement as per the requirement. See, the particular disclosure, the specific auditor will do their checking and everything they will do and do it. When it is bringing on the presentation level, while we are presenting it, that the auditor for all the presentation, say example, 4 auditors there, each 10 disclosure is given, but all the 10 will be put. However, when it is presentation on the which line item on the first and second, they will realign it accordingly. Whether it is significant or insignificant, accordingly they will assign it. Then those part, the putting in the presentation format and reviewing it is all are responsible.
Yes. So basically, when I talk about this term responsible, that doesn't mean you have to go and test again. That means you have to ensure that someone has tested and you can rely upon his work. And whatever outcome it is, you are aware of that outcome. For example, if joint auditor A has tested, the responsibility of B is to ensure that someone has seen on whose work joint auditor B can rely upon. For example, if joint auditor A has tested, that information is available with B in a documented way, and that information says the presentation disclosure of this particular area is perfectly fine, he has to assume that okay, the testing has been done, no need to go and check again. Over there he can rely upon, but still he needs to make sure that he goes through the documentation where it is written, okay, this area has been tested by joint auditor A. So he has to see that someone has tested this on whom he can rely upon. That is his responsibility to make sure that the area is tested, and if there are any outcomes of that area which requires his attention are brought to his attention, which may impact his audit opinion. That is the responsibility for. Responsibility doesn't mean that you have to test everything again and again by each and every joint auditor. Okay, So even on the ground, when a joint auditor is done with his testing, he shares the work paper with a conclusion and with a summary. What are the findings from the testing of that particular area? What level of testing he has done? Samples, everything, in a structured way, a document is shared with the work papers. And then other joint auditors go through that document, satisfy themselves, okay, the testing is appropriate. Now, instead of going in detail of the testing, they see that whether the selection of the audit procedures and appropriateness of the audit procedures are perfectly fine. The git that you were saying, that appropriateness and the selection of the audit procedures, and they satisfy themselves. Once they are fine, okay, good to go. That is the responsibility means. You don't go and test again and again. You can rely upon, you can assume that the other joint auditors have carried out their part of the work that was actually assigned to them as per the standards. Okay, it is not necessary to review the work performed by other joint auditors, whether they have actually performed the work in relation to the standards or not. You have to assume, and you will assume, if let's say for example joint auditor after testing says everything is fine, you will assume that okay, he has provided me all the relevant information about this and my areas that he was having the access to. I will assume that, I have to assume that, and then based on that I will carry on my procedures. Clear? So first of all, with respect to the report, if there is a differences, issue common audit report and separate audit report. And you need to refer it to the other matter paragraph, reference in the other matter paragraph. Second, you have to assume that the other joint auditors have carried out their part of the audit work in accordance with the standard. You can assume that, perfectly fine. Not necessary for a joint auditor to review the work performed by another joint auditor or perform any test in order to ascertain whether the work has been actually performed. You can rely on that. And you will assume that other joint auditors have brought to your notice any significant departure from the applicable financial reporting framework or significant observations relevant to their responsibility notice in the course of audit. Simple. That is something you will assume, and provided you have that information, that okay, what work they have done, what is the outcome of the work they have done. Clear? I hope you understand the term responsible here, what responsible means. Most of the students go and learn, okay, joint auditors are jointly and severally responsible for these areas, done. Some people will provide you acronyms to remember these points easily. That's not the intent over here. Intent is to understand word by word logically. Clear? Any doubt?
Clear, sir.
Clear, sir. Thanks for the clarification.
Now, one last part, that is the communication. Nature of the communication required. Remember, this point was there in the audit plan. Let's say in our plan, we decided we will communicate on a weekly status meeting with the CFO and controller during the field work. So the question comes is, do we need to have separate communication joint auditor wise, or a combined communication will be sufficient? Do we need to do a separate communication or combined communication will be sufficient?
Combined will be sufficient, sir.
Okay.
Sir, when there is a specific work assigned to the particular joint auditor, they will agree between the timing and nature and resources. Accordingly, they will go and discuss with them. See, when there is a joint responsibility, for that the joint meeting is needed.
Yes. So absolutely correct. Now here, see, when it comes to the communication, okay, if you see, we specifically discussed one term called uniform approach. For uniform approach, there has to be, uniform communication. Now there could be areas where you can have separate communication. There could be areas where it is advisable to have a single communication. For example, ethical standards or ethical requirements and independence can have a single communication. All the joint auditors are have complied with the ethical requirements, including independence. Now, let's say if there is a scenario where you have a separate audit report and the common audit report. At that point in time, you need to have separate communications. So, communication will also depend upon the area for which you are communicating, okay, and whether it was a joint responsibility or individual responsibility. So, this individual or joint responsibility will decide the communication. Okay. However, most of the time, you have single communication. For example, this one, uh, weekly status meeting. 99% weekly status meeting is conducted with all the joint auditors together. Reason because this meeting is not only used to inform CFO or controller, this meeting is also used to provide updates to other joint auditors. Formal communication, same. So these letters are not only issued for the audit committee, but they are for the record purpose of other joint auditors also. So all the letters are issued keeping everyone in loop. So 99 to 100%, every communications happen jointly. No separate communication happens. That is on ground I'm talking about. But you have to communicate to the those charged with governance because of SA 260. Now the way you do that is more important. Okay, like we also discussed that at multiple stages that joint auditor has to communicate to other joint auditors about the areas, risk of material misstatement or testing that they have performed. For example, here joint auditor shall communicate to other joint auditors, okay, overall financial statement level areas, okay, with respect to risk of material misstatement. Plus they need to communicate to other joint auditors about decisions taken, or a lot of things are there that we discussed during this particular part. So as a result, you already have discussed that you should have a discussion within the joint auditors. That's why it's always preferred to have a common communication with those charged with governance, so that everyone is informed about everything. Clear?
Yes, sir.
Now, if no doubts, uh, this is your study material. We will quickly go through the study material also. These are the objectives that we discussed: broad objectives, broad principles, uniform approach, distinct areas, individual and joint responsibilities. Okay. Then planning, risk assessment and allocation of work. So identify division that we discussed. Overall audit strategy to develop the audit plan, scope, timing, direction of the audit. Okay. Then you need to ascertain the reporting objectives, what type of audit it is, what are the financial statements, consider communication, preliminary engagement activities, nature, timing, and extent of resources. Remember, IT resource, limited days, valuation resource, limited days. Okay. Discuss risk of material misstatement with the other joint auditors. Discuss document the nature, time, and extent of audit procedures for the common and specified allotted areas, common engagement letter, identification of allocation of work, again, responsibility and coordination among joint auditors. Now, all the joint auditors will be responsible jointly and severally for these two common areas or identified. These four deemed one. Remember, we discussed again. Provide the information that come across to other joint auditor, which they deserve the attention. So means if you identified something, let the others know. Okay. Then conclusion. Again, when I talk about conclusion, you can assume that they have performed the work, plus they have made you aware about any particular departure which is there. So you can assume that they have performed the work, provided you have already satisfied yourself that okay, they are saying it is perfectly fine. Communicate with each other about the conclusions. So before finalizing the audit report, communicate with each other. Then only you can assume that okay, there is no observations in the other joint auditors areas. And communication with those charged with governance that we discussed just now. So this is your SA 299, which is also provided in your study material. Joint audit of a financial statement. Any doubt with any of the area of this particular standard? Any doubt?
No, sir.
So there is one doubt: how and on what basis audit fees is shared by joint auditor? Mohan, see, that is again commercial terms which are basically dependent upon all the other things which are there in the audit. When I talk about responsibilities, area allocation, time and nature of resources being utilized, experience, a lot of things are there on commercial part. So it's not single or simple answer. Okay, that okay, these are the three things. It's very complex discussion when it comes to the commercial decisions which are there. Any other questions or any other doubts?
Sir, in case of joint audit, like there should be minimum two CA form, means that will be different now. Means it should not be the same CA form CA.
Sorry, can you repeat your question again?
Sir, I want to know, like in case of joint audit, so suppose there is two joint audit, so that should be of different CA form, not of the same CA form.
No, see, the reason because when it comes to the same CA firm, you appoint a CA firm as an auditor. You don't appoint the engagement partner as an auditor. Now, if I appoint a CA firm as an auditor, if there are two engagement signing partners, that's not a joint audit. There is still only one auditor, because at the end you have only one FRN under which the signing is happening. That's not a joint audit.
Yeah, which means that it should be the different audit firm.
Yes.
Sir, in case of joint audit report, like on which letterhead will be joint audit report shared?
See, generally, in case of joint audit, there is no letterhead used. Or what they do is they use both, like one copy on his letterhead, one copy on his letterhead. But usually there is no letterhead, which is used on the for the audit report.
Yes, sir. When the engagement letter also receiving, they will put the each and every joint auditor names, and accordingly they will sign in their portion. It can be issued in either of the auditor letterhead. It's not a matter of that. I have seen that.
See, generally what happens is, I'll tell you frankly, like in case of joint audits, which are more on the listed entities, for the listed entities, if you see the letter, if you see the joint audit reports, they are, issued without any letterhead, or for the purpose of if anyone requires the audit report on the letterhead, then they will issue on the one copy on this letterhead, one copy on this letterhead. But usually it is without letterhead. Reason because everything and rest of the auditor's detail are captured in the when they sign, where they sign. Name of the auditor, engagement partner, name of the firm, FRN number, all those things are there.
Okay, sir. Now clear.
Thank you, sir. It's a great discussion we had with that joint audit. Thank you so much.
Thank you. Okay, so if no further doubts, what we can do is we can take a quick 10-minute break. After the break, we'll go to the next topic, which is again very important. That is your SA 402, audit consideration relating to an audit of an like relating to an entity using service organization. Very important topic. So let's take a quick 10-minute break. Yes. discussion. Okay, so now we are going to discuss about SA 402, audit consideration relating to the entity using service organization. Okay, so my first question, what is a service organization? What do you mean by service organization? Anyone? What do you mean by service organization?
Sir, when the entity using the other organization to perform their activity, say example, the payroll activity is even given to some other organization to perform on behalf of the entity, or like that, the given the works or to other organization to perform. So, say example, tax calculation, GST filing, TDS filing, like that. The entire activity is performed by the third party. Third party on behalf of the entity is called the service organization.
Yes, very good. Absolutely correct. Uh, Also, yes, Keith, very good. So when I talk about service organization, okay, it's something that we call it outsourcing. Okay, when our organization is performing some activities on your behalf. Now, with respect to this, there are some definitions that we need to understand first in order to go deeper into this concept. So there are some terms that we will first understand, and then we will understand how these terms and what when we will discuss the standard, these terms will be very useful. Okay, so let's start. And this particular discussion and the notes that we will prepare will be very important for you guys also to understand. Okay, so essay, sorry, SA 402. Okay. Now here, what we need to first understand is who is called what. So for example, ABC Limited outsourced its payroll to World Payroll Services, World Payroll Services Private Limited. So there is a company called World Payroll Service Private Limited. To them, they outsource the payroll function. Okay, fine. Now in this arrangement, as of now, who is the user entity? If you guys have gone through the particular study material, you will be able to answer this. Very good, Geet. Who is the user entity over here? Who is the user entity? Very good, Chitra. Very good, Geet. Come on, come on. Who is the user entity?
ABC Limited or the user entity, sir?
Yes. So ABC Limited, absolutely correct, is a user entity. So this is the user entity. Now, my second question. Who is the service entity in this particular scenario? Service entity or service organization, basically. Service organization. Very good, Chitra. Very good, Geet. Service organization. So here, by default, you don't have any other option to call World Payroll Service as a service organization. The name is also service. Simple. Service organization. You don't have any other like third person in this scenario as of now. So ABC will be user. World Payroll Service will be the service organization. Now let's say ABC is being audited by. So stat auditor of ABC is, let's say, MKP and Company. And World Payroll Service, when I talk about World Payroll Service, it is being audited by, let's say, when I talk about stat audit over here, stat auditor. So it is being audited by, uh, let's say XYZ company. Okay, XYZ company. Now these are the two CA firms. What will you call MKP and Company? What will you call to MKP and Company? Come on, guys. What you will call to an MKP and Company? Very good, Chitra. Very good, Geet. Anyone else? What you will call to MKP and Company? See, by same logic, if I go ABC was a user entity, this will be user auditor.
User auditor or entity auditor.
Yep, user auditor. Okay. And when I call this as a service organization, what it will be?
Service auditor.
Correct. Okay. So this will be known as a service auditor. So now you are clear with certain terms. Who is the service auditor? Who is the user auditor? Who is the service organization? And who is the user organization? Okay. Now question comes is that one, simple question. When user auditor will audit user entity, he will use SA402. Remember this. When user auditor will audit ABC, that is user entity, okay, where ABC has used service organization, user auditor will rely upon SA402. Correct? Okay. Now, one important question comes is when service auditor will audit service organization for user entity, which standard he will use? When service auditor will audit, okay, service organization for the user entity, which standard they will refer to? Which standard they will refer to?
Sir, he will refer to the normal standards on auditor. No, it's applicable to all the audit standard except the 402.
Okay, let me tell you one thing. So here, service auditor is auditing service organization for the user entity. Service auditor is auditing service organization for the user entity. How many parties are there? So service auditor auditing service organization for the user entity. Three parties are there.
Yes, sir.
Okay. So I will write SAE 3 and 402. 402 common and 3402. So there is a standard called SAE 3402 that talks about assurance report on controls at the service organization as of now. SAE 3402. So when we will go and understand the chapter on the standards on assurance engagements, other than the audits of review of historical financial information. At that time, we will encounter SAE 3402. And that's, I will again, discuss this particular point. I will recall you, we will discuss this, that what now service auditor has to do for user entity. Now, when these kind of audit happens, like when the auditor will audit user entity. Okay, when the user auditor, I'm talking about this, when the user auditor will audit user entity, okay, he will use SA 402. Why? Because here this is the audit of this particular. I'm talking about this particular part is the audit of FS. Here I'm talking about not audit of FS. If he was using audit of FS, then fine, SA 402. But here, if he's auditing for the user entity, that's why I said three-party agreement. So I'm talking about user entity, service organization, and from service organization to service auditor. If the requirement is flowing this way for the audit, that kind of audit usually is for the audit of controls at the service organization. This is the other assurance engagement. This is not the audit. This will become assurance engagement. Other than audit. Here, he will not do audit, but he will only and only talk about controls. This is assurance engagement other than audit on controls of service organization. Okay. So here this stat auditor will perform audit on controls of service organizations as per, now this whole is as per SAE 3402. This is done as per SAE 3402. Okay. Now, if this is done as per SAE 3402, there should be outcome of this audit or this assurance engagement. Yes or no? If I am doing an assurance engagement on the controls of service organization, there will be some outcome. What is the outcome of audit? When I talk about normal audit of FS, what is the outcome of audit of FS?
To give the opinion on that audit.
Audit report. Opinion that you issue. Yes or no? So in case of an audit, the outcome is audit report, the opinion that you issue. In case of assurance engagement other than audit on the control of service organization, the outcome here is either type 1 report or type 2 report. Now, those who have already read about SA 402, what is type 1 and type 2 report? Just a brief. Anyone, if can tell me what is type 1 and type 2 report? Very good, Geet. What is the type 1 and type 2 report? Why 2 reports? Do you have different audit reports? Do you have different audit reports? No, we don't have different audit reports. There is only one audit report. There could be multiple type of opinions. One audit report, but multiple type of opinion. Very good, Chitra. Yes. So when I talk about type 1, type 2 report, okay, understand that this is the same report, but different kind of opinion. the way you have different kind of audit opinion, here a bit of scope changes. Okay, here the bit of scope changes. Okay, now what scope changes in this? So let's talk about first type 1 report. Now when I talk about type 1 report, the outcome here, when I talk about type 1 report, the outcome of type 1 report means what a auditor writes is, in audit report, generally what you write, when the audit report is there, in a nutshell, if I talk about, what do you write? In opinion. So if I talk about opinion of audit report, what is the wordings? Like, what are the wordings basically? What are the wordings?
In our opinion.
Then reasonable assurance that financial statements are free from material misstatement.
Yes.
True and fair view.
Yes.
So reasonable assurance, free from material misstatement. Okay. And true and fair view. So these are certain words that you use on the financial statement as an opinion in your audit report. When I talk about type 1 report, there are two type of wordings, or there are two things I mentioned in this. One, description. Again, now when I talk about description, it has to be prepared by management. Why prepared by management? Why prepared by management? Like description of controls. Let's say I'm talking about system and control. Description of system and controls objectives, control objectives. Okay. Why here has to be prepared by management? Very good, Geet. In this particular scenario, whose responsibility was financial statement? In your audit, financial statement whose responsibility? Who will prepare the financial statement?
Management.
Simple. You are issuing an opinion on financial statement prepared by management. Same way, here you are issuing opinion on the description. Here you are issuing the opinion on the description that is prepared by management. Now, description of what? Of systems, control objectives, and related controls. Now, what these control do? And related controls. Okay, what these control do, like we will discuss in some time. But think as of now, park it, we are talking about controls. So description of system and controls. And when I talk about control, it's a control objective. Okay. When I talk about control, I'm talking about control objective. Okay. So that's a description. But I talk about something more. That this description is something I'd never issue an opinion on a word, on a sentence. Description is something what is written, what is the control. I don't issue a opinion on what it is. I issue a opinion on whether they are working good, whether they are designed good or something like that. Okay. So here, whether the description has been designed and implemented as at specified date. Okay. So I talk about description that has been designed and implemented at a specified date is appropriate or not. Simple. That is I do in type 1 report. This is the first part. Second part. Here, my report includes one more thing. Okay. That reasonable assurance. I provide reasonable assurance. Okay. On description of that, there is a description which is given, okay, that I'm talking about. I provide a reasonable assurance on description of the service organization systems, control objectives, related controls, and their suitability of design, okay, suitability, whether they are appropriate or not, whether they are able to achieve the desired objectives or not. I'm talking about these objectives here. I'm talking about this description. So for description, I will talk about suitability of that description. And when I talk about objective, whether the controls are able to achieve the objectives or not. So reasonable assurance on suitability and achievement of specified control objective. Okay. So if I have to, reword this for a better understanding, let me do one thing. Remove this. So I will write here suitability of design plus achievement of control objective. So first I will talk about description, then I will talk about reasonable assurance on suitability and achievement of the control objective, suitability of the design and achievement of the control objective. Similarly, you do in the financial statement. First, you specify what are the financial statements, and then you provide a reasonable assurance, correct? Similarly, I'm doing this particular type here. First, I'm specifying the description, and then I'm giving a reasonable assurance on that description. Clear to this? Any doubt? What is type 1 report? Any
Yes.
doubt with type 1 report?
No, sir.
Okay. Now, if no doubt with the type 1 report, I will talk about now type 2 report. Okay. So we will now discuss about the type 2 report. Again, when I talk about type 2 report, basically, understand one thing. Type 2 report is kind of, over and above type 1 report. So whatever it is there in the type 1 report, it is already there in the type 2 report. Okay. So if I summarize here, let's say type 2 report. Now, whatever it will be type 2 report, I will be highlighting in blue so that you can understand what is over and above type 1 report. In type 1 report, I have the description prepared by management of service organization system and controls and objectives, okay, related to their control, their design, okay, how has they been designed, how they have been implemented at a specified date, plus now in type 2 report, what will happen is, along with the date, I will add one more thing, specified period. Okay. So first, earlier in type 1 report, I was talking about a particular date as at a specified date, just like a balance sheet. In a balance sheet, you specify on a date, okay, what is the balance on a particular date. But when I talk about profit and loss account, you say that profit and loss account is for the period. Yes or no? Similarly, when I was talking about controls, I was talking about in type 1 report on a specified date. Now in type 2 report, I'm talking about specified period. And plus, when I talk about design and implemented, plus I talk about their effectiveness. There is one more thing. Effectiveness throughout the period. Effectiveness throughout the period. Now let's talk about reasonable assurance. Again, I was giving reasonable assurance in type 1 also. Now I will add something new on the reasonable assurance also. So in type 1, I was giving reasonable assurance on suitability of design, achievement of control objectives. Now there will be one more reasonable assurance. That is, I will provide reasonable assurance on operating effectiveness of control. See one thing, when I was talking about this particular design over here, design, if I just for you guys, this design over here, okay, I'll remove the thickness. This was directly linked to my suitability. This was directly linked to the suitability. When I was talking about implemented control objectives being implemented, or you can say objectives over here, okay, over there I was talking about, like when I was providing reasonable assurance for these objectives, I was talking about achievement of these objectives. So if I talk about here, we have the achievement of these objectives. Now in type 3 report or type 2 report, I'm talking about effectiveness throughout the period. So obviously I need to include one more term over here with respect to the reasonable assurance. Okay. So now I need to talk about this effectiveness over here in my reasonable assurance also. Similarly, the way I was doing for objective design, now I need to talk about the effectiveness also. But this is not the only thing I need to do. Plus, I need to now see, when I talk about effectiveness, that means I need to do some testing. So for this effectiveness, like to demonstrate this effectiveness, I need to provide details of the testing. So details of test of control performed by service auditor, obviously, because this type 1 and type 2 report is provided by service auditor. So details of testing of controls performed by service auditor and their results. Without results, how can you say this is operating effectively? So based on this result, you will say this is operating effectively. Okay. Based on the results only, you will say that this is operating effectively. So the type 1 report was objective and design and objective. So then you were issuing a reasonable assurance, suitability of design and achievement of objective. Type 2 report, over and above design and objective, it talked about the effectiveness throughout the period. So it now covers the period, not a date. Type 1 was as on date, as at date. This was type 1. Okay. When I talk about type 2, it is not as at date, rather it is at throughout the period. So when you expand type 1 throughout the period, you get type 2. That is the difference between both of them. Clear? What is type 1 and type 2 report? Clear, guys? What is type 1 and type 2 report?
Yes, sir, clear.
Yes, sir, clear, sir. But why there is a type 1 and type 2, two different report?
Now I will come on that. Don't worry. See, this is something I was talking about, that this is performed by service auditor. Everything that I'm talking about is issued by the service auditor. This is by the XYZ service auditor. Whatever we are talking, performed by and issued by service auditor. Simple. Now, once a service auditor performs and issues this report goes to the service organization. user entity, and then user entity will provide this report to user auditor. So user entity then will provide this report to the user auditor over here. Now, when user auditor will audit the FS, at that point in time, he will use type 1 and type 2 report. And how, that we will now understand. Okay. And that is, we will understand by example. Okay. See, when I talk about auditing the FS of ABC Limited, I'm talking about the audit of financial statements of ABC Limited. Over here, if I talk about the payroll function, which is being outsourced, if I want to audit the payroll function, practical scenario on ground, tell me how will you audit that? So how will you audit payroll function in case of ABC? Tell me. Like payroll function is outsourced. And to give you a brief example, okay, to give you a detailed example, hypothetical example, we will understand that all the payroll calculations of ABC is done by World Payroll Service. How will you actually now, do the auditing of the payroll function? Tell me, anyone?
The World Payroll Service Limited will get all the information from the ABC Limited. How many employees are there on roll? How many number of working days? What is the sick leave? What is the casual leave? All the information pertaining to the attendance, all these things, they will get it from there. Based on that, they will calculate what is the salary, what is the other statutory regulation, right? The PF, ESI, or TDS, or something like that. They will call perquisites. All these things they will take into the consideration. Accordingly, they will work and they will say the each employee what is the eligible amount of the salary.
Okay, fine. What else you will do to audit the payroll function?
And the account number, bank account number, I mean, all these things. Upon that, they will also make a checker concept in that service organization, how the internal control function, all this, how they are documenting all the calculation, and while responding back to them, the ABC Limited, what is the procedure? They say this is a confidential matter. See, the responsibility is clearly defined between the service organization and the user entity. Say their responsibility, service organization responsibility and the user entity responsibility, they will divide between them. Accordingly, they will work and they will provide the services.
Okay. Okay, very good. Yes. Okay. See, anyone else would like to add something more? Yes, Chitra, very good. By checking whether World Payroll is effectively performing their functions, whether the data provided to World Payroll is proper or not. Okay. Testing control at the entity will not be sufficient because some functions are performed by service entity. Okay, Geet, very good. Yes, we need to check that. What else? Anyone else would like to add something more to this? Anyone? No? Okay. See how it will work. I'll tell you, like in a practical scenario, how it works. Basically, when I talk about using the service organization, and when it comes to the auditor of the user entity, NKP and company, okay, if they have to test payroll, can they go and perform testing at the World Payroll Service at the World Payroll Service ends, do you think they can go and perform the testing at the place of World Payroll Service? Yes, no?
It's not needed, sir. First, ABC Limited will introduce with them. There is a service organization we provide. Then only they will collect all the information from them. Based on that, they will do the audit. If there is a need for visit them, then they will discuss with them and fix the appointment. Then they will go and do the verification.
Yes. See, what will scenario will be that when the testing will happen actually on the ground, what will happen is I will test what are the functions and activities which are being performed at the user entity level, first of all. Then I will understand what are the functions which are performed at the service organization level. Once I do all these things, once I perform all these things, then I will decide a testing approach. Then I will go and decide what testing I need to do, where I need to do. Okay. And by that way, I will decide the workflow of my testing. For example, I have decided that, okay, the testing that I will perform at the ABC level will be of maintaining data. The data that is being maintained at the ABC level is something, I will check over there. Now, let's say monthly salary calculation, which is performed at the World Payroll area. So World Payroll calculates monthly salary and provides that to ABC for payment. So when a World Payroll Service will calculate monthly salary, I cannot go at the World Payroll Service, place and say that, okay, tell me how you are testing. I will audit your organization now. A lot of service organization will not allow. Okay. A lot of service organization will not allow that kind of scenario. They will not, allow you to go and come here and test their particular, what you can say, entity just for the purpose they are providing outsourcing service to your entity. What they will say is, wait, don't do something, don't do audit. We will provide a report from our auditor that will talk about that, okay, what are the functions that are being performed at our end and whether they are being performed at correct or not. Okay. So what they will do is they will come and they will say, no, let's do one thing. Let me give you a report of my auditor. Use that report as an evidence for you. Okay. And then that particular report will be used by the service auditor, user auditor, that service auditor report that I'm talking about, type 1, type 2 report. And then that type 1, type 2 report will be used as an evidence to understand whether the functions that are being performed at the service organization level are performed appropriately or not. Clear? I hope you understand now. Yes or no?
Sir.
So I have a detailed example for you guys to discuss this in, so that you can understand with much more detail. Let me share that example. Give me a minute. Just give me a minute. It is opening up. Okay. See, the things we discussed: user entity ABC, service organization World Payroll Service, user auditor MKP, service auditor XYZ. Okay. Now, step by step, what are the processes? Like, we will understand one by one. Master data management, adding new employee, changing existing employee data, salary revision. So let's say ABC HR department initiates the changes. There is a control that all changes are approved by an HR manager via formal documented request. Okay, this is the control. So what will happen is this control is a user entity level. Okay, then this control will be tested by the user auditor. Now let's say there is a control, roles and controls at World Payroll Service. For example, the control is World Payroll team will update the master file, because if there is a change over there, they will pass on the change to them and they will update. And control is input validation. The payroll system has checks to prevent invalid data entry, for example, incorrect bank format. Plus, they have a segregation of duties. The person who enters the data is different from the person who reviews and approves it within the payroll system. Okay. So now what is the scenario is we have some controls at the payroll end, like World Payroll Service has some controls. Okay. And these controls, I don't know whether these controls, as an auditor, MKP, I don't know whether these controls are working fine or not. Whether they are working, I don't know as an MKP. So what I need to do is either I need to go and test, or else if World Payroll can provide me a report that these controls are working fine, good for me. So type 1 report will only talk about the design. This is the design. Type 1 report will only talk about the design, and type 1 report will only talk about the objective. Objective is to identify incorrect bank account. This is the objective. Incorrect bank account format. Okay. Prevent invalid data entry. So this is the kind of objective over here. And this is the part of the design, segregation of duties. So this is design plus objective. Both invalid input invalidation and segregation of duties. Now to validate this design and objective as at date, specified date, let's say for example 31st March 25, I will be requiring which report? As an user auditor, I will be requiring which report?
What type one?
Type 1 report.
Type 1 report. But do you think that evidence will be sufficient for me that this design and objective were achieved appropriate as at as at 31st March 2025? Do you think this is appropriate, or this is sufficient and appropriate audit evidence? Do you think it is sufficient and appropriate audit evidence for me?
No, sir.
So in this case, type 1 report is not sufficient for me. I would be requiring type 2 report, which can provide me throughout the period.
So then what is the use of type 1 report, sir? And there is no use for that.
Yeah, I'll tell you that. So when I talk about type 1 report, okay, when I talk about type 1 report, at that point in time, you don't have a full outsourcing done. Now, in this example, you have a full outsourcing. So you have monthly variable input outsourcing, you have payroll processing, a lot of things outsourced. Okay. But let's think of an example where you have only certain portions outsourced, not everything. There are a lot of controls which are being performed at the user entity level. And you already have a comfort from the controls at the user entity level. At that point in time, there is no need to obtain throughout the period service. Hypothetical example, aging report. Okay. So there is an entity to whom you have provided or outsourced your reporting, MIS reporting. Now, one of the MIS reporting is aging report, data's aging report. You use that aging report for the purpose of your calculation of bad debts. At the year end, you use that report for the purpose of calculation of your doubtful debts provision. Do you need a comfort whether that particular report was appropriate throughout the year, or do you need a comfort that the report was appropriate at the period end? What kind of comfort do you need?
Yeah, up to the particular date.
Particular date, na? Because let's say what was the aging on November is not relevant for me. Aging or the debtor balance or the balance for the trade receivable is reported at the period end, year end. I am concerned with the year end number. I am concerned with the provision on the number on the which is year end. Why I will obtain type 2 report? There is no need for type 2 report. I will only go for type 1 report. Similarly, you need to understand what is your requirement, whether you need for a period, like throughout the period, or you need as at a specified date. If you need comfort for a specified date, fine, go for type 1. If you need comfort for throughout the period, go for type 2. Okay, now coming back to our standard. So the objective, we will again always start with the objective. What are the objectives of the auditor? Objective of the auditor is to obtain an understanding of the nature, significance of the service provided by the service organization. So what kind of service they are providing and their effect on the user entity and its internal controls relevant to the audit, so that you can identify and assess the risk of material misstatement. First of all, understand what service is being provided and where is the risk of material misstatement. Once you identify risk of material misstatement, then design and perform the audit procedures to these risk of material misstatement. This is the objective. So here in our example, we will understand what is the service being provided. What are the controls? Let's say, for example, hypothetical example over here. Okay. Now, all changes are approved by HR via formal documented request, and HR uses a standard form to ensure that all necessary information is captured correctly. This is a control. Yes or no? This is one control. This is another control. Now tell me if this control passes and this fails. Okay, this is passing, this is failing. What impact it will have? What impact it will have? For example, here input validation was there and the manager did not verify the input. It was directly entered into the system. What risk I carry?
There will be material misstatement in financial statement.
They say input risk.
Okay.
There will be incorrect processing of the payroll.
But don't you think this control is not relevant for me? Because if this control passes, all the information which is used is captured correctly, means correct information is going to them and they are entering the correct information. Their control is prevent invalid data entry. So if correct information is going to them, they will be entering the correct information. Unless and until there is a human intervention who is after providing the correct information also enters the wrong information. If this is automated, let's say for example, if this is automated, then not relevant for me. However, if this is manual, not automated, but manual, that the person is there who is getting the correct information and then he's entering the information of bank account in his system, this will become relevant for me. So how the systems are designed, how it is working will totally decide whether a control at the service organization is relevant for you or not. So you need to understand the significance of those controls which are placed by the service organization. Are you any questions on this? Is it clear or not?
Suppose if the user entity providing the incorrect data, then obviously the service organization will process the
Incorrect data.
incorrect data only. Output will be the error only.
Yes, correct. Absolutely correct. But if the user entity provides these correct data and there is an automated system in process that whatever data that will flow from user entity will directly being entered into the service organization system where a person reviews it, fine. If the data entry is done manually by a person, then there is a problem. So you need to understand how the data is being handled by service organization. Now here, in this particular example, what is the assumption that World Payroll Service will have? So if I talk about assumption that World Payroll Service will have,
whatever the information received from the user entity, that is a correct and the final. It is
absolutely
approved from their side.
yes. So World Payroll Service will say that no, I am getting the data from you. I will assume the data is correct. That is not my responsibility. That is your responsibility. Yes or no? That will be the assumption that will have the World Payroll Service will have.
Yes, sir.
Now this assumption, yeah.
Sir, I think it should not be assumed, but however, it has to be agreed. No, on the date of signing, it has to be written and agreed. Any data received from the user entity, it is a final, and it is a correct one. It has to be agreed in the written.
Yes, and let's say for example, once agreed, World Payroll Service will assume that it is working fine. The way they told us, it is working in that way. So let's say for example, before providing the service or before providing or entering into this arrangement, World Payroll Service had a written agreement with ABC that you will check the data at your end and then you will provide me that data. Okay. Now every time when World Payroll Service will receive a data, they will assume that data is checked based on the agreed that was discussed before. Correct or not?
Yes, sir.
Yes. Now we will go to SA 402 to understand one more concept. The concept is known as the complementary user entity controls. Now these are the controls that the service organization assumes, okay, in the design of its service will be implemented by the user entity, and which if necessary to achieve the control objectives are identified in the description of the system. That means here if I say that this control is necessary to achieve the objective, what is the objective here is that the data should be correct which is entered into the system, and I assume that whatever data will be provided by you guys will be correct, will be approved, and this control I assume will be operating throughout the period. that will become, this control then will become your complementary user entity control. Because it is at the user entity level, it is the control. That's why it's a user entity control. Why complementary? Because service organization is assuming that this is being performed and it is necessary. That's why it is complementing, and this is in addition to whatever process is being followed by the service organization. Clear?
Yes, sir.
Any doubt with respect to the complementary user entity control? Any doubt? Or
Still I'm having the doubt that in the type 1 report, the effectiveness of the control is not tested, and although test of control and the report is not also issued on the type 1. How the user entity auditor can rely upon the type 1?
usually it is not. Usually type 2 report is always preferred, because in most of the scenarios you will not only give period and or on as on date processes to someone else for the outsourcing. You provide throughout the period, but yes, we have an option to issue. Now what happens is, see, some of the at a lot of times the service organizations are not ready to provide type 2 report. Simple, and the basic reason is, to provide a type 2 report, someone has to go at the service organization, someone has to test, validate all the controls throughout the period, and it involves cost. So service organizations a lot of times deny in providing type 2 report. At that time they say that no, we will only provide type 1 report because it is cost effective for them. A lot of times this happens. Now the onus shifts on the user auditor whether the type 1 report is a sufficient and appropriate audit evidence for him or not. And that is now we are going to understand. So these are the terms that we are now we are understanding: user entity, service organization, user auditor, service auditor. Okay, now let's understand how to achieve the objectives. Objective is obtain an understanding and then design and perform audit procedures. In order to obtain the understanding, what do you need to do? How do you obtain the understanding of an entity?
SA 315.
Absolutely correct. Very good. SA 315. Same standard says that when obtaining an understanding user entity, use SA 315. How? You need to understand the nature of service provided. You need to understand the materiality of the transaction process, in degree of interaction between the activities of service organization and those of user entity, and nature of a relationship between them. Nature of a relationship, whether it's a contractual, okay, whether they are holding subsidiary, what type of relationship is there, whether there are some common people because of holding subsidiary. So understand all these things, and based on 315 only. There is nothing further, there is nothing rocket science in this. Even when we are understanding the internal controls, follow SA 315. Yes or no? Now there is one special use that we will see of type 1 report. See, that can be obtained from type 2 report also, but that can be obtained from type 1 report also. So let's say, for example, you are not aware about the controls which are there. This information is not available. This information is not available of service organization, that is world payroll, what controls are there, what is not there. I have written in this file, but how will you come to know as an auditor of user entity? You will only come to know when you will either read type 1 report, type 2 report, or your yourself will go and test. Okay. So sometimes first to obtain understanding also of the internal controls, they obtain type 1 report. And then when required, they obtain type 2 report. So simply standard also says the same. If you are not able, if user auditor is unable to obtain sufficient understanding, obtain either type 1 report or type 2 report if available. If not available, contact service organization through user entity to obtain information. If not, visit service organization. Perform procedures if they allow. Or ask another auditor to perform procedure that will be necessary to get you the information. You can do any of the following procedures, one or more following procedures. Go obtain type 1, type 2. If not, contact service organization through user entity and understand the information. If not, visit service organization, perform procedures. If not, ask someone else to visit service organization on your behalf, if they allow. The fourth one is usually used when, I'm just giving an example. Fourth one is usually used when, let's say, service organization is in another country and they don't allow anyone from outside the country to visit their premises because of the confidentiality of the services they are providing to other entities. In that case, you may ask a local auditor to visit there and perform necessary procedures. Clear? So how will you obtain understanding? You will follow 315. Under 315, you will understand the nature of services. Nature of services. You will understand materiality of transactions. You will understand interaction between entities. You will understand relationship between entities. Okay. So these are the four things you will understand. Nature, materiality, interaction, and relationship. So if you want to summarize in a short form, how will you understand the service organization is STIR, STIR. You need to stay to understand. That is service, transaction, interaction, and relationship. Okay. Service, transactions, interaction, and relationship. This is how you can understand the service organization and user entity both. And then if you are not able to understand, either obtain type 1, type 2, either go contact them, visit, or use another auditor. So report, contact, visit, or another auditor. Simple. These are the ways you can obtain further understanding if you don't have the understanding. After performing STIR. After performing STIR, if you are not able to understand, perform this one. Report, contact, visit, or another auditor. Option available to you. Clear? Any doubt?
Right, sir. Clear, sir. Thank you.
Clear? Okay. Now, very important part. Can I blindly rely upon type 1, type 2 report? Can I blindly rely upon type 1, type 2 report? Let's say I have received type 1, type 2 report.
No, sir.
How
You
many of you
cannot
say
blindly.
not blindly? Okay. How many of you are saying no and how many of you are saying yes?
No, sir.
I'm not talking about type 1, type 2 report as a sufficient and appropriate audit evidence. See, there are two things that I'm talking about. One is the type 1 or 2 report. Okay, I'm talking about placing Reliance. And after Reliance, I'm talking about second question. This is first question, placing Reliance. Second question is whether sufficient and appropriate audit evidence. This is second question. Now let's talk about first question. Can I place Reliance on type 1, type 2 report blindly? I received type 1, type 2 reports signed by auditor. Can I go and place Reliance on that? Whether it's a sufficient and appropriate audit evidence or not, secondary question. Placing Reliance, first question.
We should review, sir. It should not be directly accepted as it is.
Okay, that cannot be directly accepted. Anyone else? We will take 10 minutes, 10 to 15 minutes more. We will extend a bit so that we can complete this particular topic, very important one. So what do you think? Can we place Reliance? Okay. So generally, see, to place a Reliance, you need to understand two things. Issued by CA under SAE 3402. My answer will be yes. If it is not issued by CA, other cases, my answer will be no. I need to test about the Reliance then. Placing Reliance directly, no. So I'm placing Reliance directly. No. I need to perform procedures. So here, perform procedures before relying. Now what procedures? Simple. Who is the auditor? Competent enough to perform the audit. Okay. Who is the auditor? Whether he is competent enough to perform the audit. What standard he has used to issue audit, to issue report. So if I have answers to these questions and they are appropriate, I can rely. If I don't have answers to these questions or anywhere, if I say no, let's say competent enough, answer is no. That person was not competent enough to issue a report. Whether, like, let's say, for example, a graduate, commerce graduate, issued a type 2 report by using or under standard SAE 3402. Will you rely? A fresh commerce graduate issued type 2 report under SAE 3402. Will you rely?
Can
No, sir,
he issue,
because he is
issue
not
the
a CA.
report? Can the
Absolutely.
non-CA issue the SAE report under SAE 3402?
People will approve.
Sir, he is asking non-CA can issue this report, type 2 report or type 1 report.
See, in that case, the question comes is, let's say, for example, I'm type 2 report. What is a type 2 report? That the controls were working effectively. Okay, it's not a statutory report or issued under any law. It is the standard says that how to issue this report or what procedures a chartered accountant in practice has to follow. Now, a commerce graduate issuing this report, if it is fine by company, who will stop it from issuing? Now the question comes on the Reliance. Can anyone rely on that report? Answer is no. You cannot stop someone, a company, you cannot stop a company from hiring someone and asking him to do work which can be performed by anyone. There is no statutory limitations on that. Can I appoint a commerce graduate as an internal auditor in the company, apart from the listed entities or the entities where the internal auditor qualifications are required, or regulated entities? I'm talking about normal partnership firm. Let's say partnership firm is there, very big partnership firm is there. Tomorrow they want to appoint a commerce graduate as an internal auditor. Is someone stopping them?
No.
No, sir.
Will you rely upon the work performed by internal auditor?
Yeah, definitely. We have to test the procedure, what the assumption, what is the control, what is the operating procedure, whether it is, if it is ever independence, everything is followed, then we can rely upon.
So the one of the question on for the evaluation is the competency, capability, and the skill. Okay, so is that person competent enough to perform that particular role? Is that person has necessary qualification and understanding or experience to perform that role? Then only you will go for subsequent, like what is the methodology used, whether he is independent, is there any pressure or not. The first step is the capability, competency, skill, experience that you will evaluate. Similarly, in this scenario, if a person issues a type 2 report, I will understand whether he is competent enough to understand what is a type 2 report, or competent enough to perform the procedures that are required for the issuance of the type 2 report. Second, that he has the capability. Tomorrow, let's say I have let's say tomorrow there is a service organization having revenue in billions of dollars because they are providing payroll service across the world. And a type 2 report is issued by some fresh graduate guy from outside, some other country. Definitely, I'm not going to rely upon, because it's a very big complex entity. Number two, a lot of transactions are being placed, a lot of controls will be there. How a fresh graduate from foreign country can satisfy that he will have the relevant experience to issue this kind of report for this very big entity where they have multiple IT systems? So competency is a very big question when it comes to the type 1, type 2 report issued by a person other than a CA. And then what standard? Let's say if it is a competent person, he is the chartered accountant of some foreign institute. Fine. Now what standard he has used? Whether that standard is equivalent to SAE 3402 or similar to them. If yes, then yes, I can place Reliance. And then I will proceed to the next question. How I will decide whether it is sufficient and appropriate for me? How I will decide whether it is sufficient and appropriate for me? Anyone? Pretty straightforward. Pretty straightforward. Number one, the controls that you are looking for or the process that you are looking for, are they appropriately specified in this report? Number two, the type of assurance you need. For example, if you need assurance for throughout the period and you have a type 1 report, not appropriate, not a sufficient and appropriate audit evidence. I need a type 2 report. So when you get a type 1, type 2 report, first of all, understand what is your requirement. Okay, whether you need as a date or whether you need throughout the period. Number two, understand that, okay, for example, here in this scenario, if you have a sufficient and appropriate, if you have a type 2 report, and let's say type 2 report, what are the contents of the type 2 report? Can anyone tell me what is the content? What were the contents of type 2 report?
So it contains the description and the control, whatever is there for the specified time, also the work period time, and the effectiveness of that control, that is also there. When in the auditor part of that, he will test, he will also check the objective reasonable assurance that the description and control of the management, and also the effectiveness of that control, he will verify it. In addition to that, he will check the test of controls and give the report.
Perfectly fine. Now let's say you have a type 2 report which says all controls are operating effectively, and you have a detail of test of control performed and their result. Now in detail of test, what they have done is they have written only one sample tested for each control, and that is passing. You have a type 2 report issued by a person who is competent, saying operating effectively, but the detail of test talks about one sample only tested for each control. Will you rely?
So then, no, sir, then it will not be sufficient.
Absolutely. So, in order to understand whether the report is sufficient or not, I need to check every aspect. The objectives, whether they are being achieved or not. Design, whether it is the controls are designed appropriately or not. Whether the controls are operating effectively or not. Whether the details which are given for the test of control are sufficient or not. Whether the results which are coming after the test of controls are proper for me or not. You need to check all these details, and then only you can comment whether is it sufficient or not. Plus I need to check what are the complementary user controls. For example, in our case, let's say I'll go to our example which was there. See, type 2 report, let's say you have a type 2 report which says this control operatingly fine, this control basically is appropriate, this control is everything is fine, objective is fine, design is perfect, operating effectively good, everything is good in this control, and this control relies upon this user entity control, and this fails. So in our earlier example, I said this fails and this passes. I reverse it. I'm reversing this. Now this fails and this passes. Now tell me, is this type 2 report relevant for you? Is this passes type 2 report which says everything is good is providing you sufficient and appropriate audit evidence? No, because the starting point itself is not appropriate. So the complementary user controls on basis of which the whole process, rest of the process was designed, the starting point failed. So how you can expect the next processes to work appropriately? On the similar lines, when you decide whether type 1 or type 2 report are appropriate for you or not, evaluate descriptions, design of the control, sufficiency and appropriateness, complementary user controls, whether they are working effectively or not. So when you want to use that particular report, okay, for as an audit evidence, using type 2 report as an audit evidence, what do you need to check? Evaluate, design, description, operating effectiveness is appropriate for the purpose of the auditor. Determine whether complementary user controls identified, okay, which are there in the service organization that they have identified, okay, are operating effectively. This is your start point. Complementary user control. As example, start point. If your starting is wrong, no purpose of having the rest of the things. Evaluate the adequacy of the time period covered by the test of controls. Very important point. Let's say the type 2 report over here about this control, which says it passes, is for 6 months. the type 2 report that you have received from this particular entity is for period, let's say Jan to December, because they are outside India, and you are auditing April to March, can you use the type 2 report? No, we cannot. So similarly, what are the period covered? That is also important. And once you decide everything, then you need to understand the results, whether the test of control performed and their results are appropriate for you. And then you need to understand whether we can use the type 1 report or type 2 report or not. Any doubt with respect to type 1, type 2 report using as an evidence?
No, sir. Clear, sir.
See, there could be a sub-service organization in place. That means service organization again provided their services, like, again has outsourced some of the activity to one more. Let's say, for example, in our case, ABC to World Payroll was there. Let's say World Payroll has also outsourced some of its functions to, let's say, XYZ Limited. So this will become self-service organization. And if you want to evaluate the controls and whatever we have discussed, follow same procedure that we followed for World Payroll.
But it has to be primarily agreed by the user entity to sub-servicing.
Yes, but that should be relevant. See, I can test XYZ's control, but it has to be relevant for the user entity. So I will test only those services that are relevant to the user entity. See, they might be performing a lot of things. They also might have, outsourced their internal process. What is relevant to the audit of the user entity, that only I will go for in both of the scenarios. If there is something relevant for the user entity, then only I will go, otherwise I will not. So the first point is understanding what is relevant for the user entity by applying SA 315. Clear? Any doubt to any of the part that we have discussed? Any doubt? So if no doubt, let's quickly go through the study material, how it is given. Okay. So point number 6 is you have a SA 402. You have a definition, what is service organization, who is the service auditor, that we discuss in detail. Okay. Then you need to understand the entity, business processes relevant to the financial reporting. So you need to understand the classes of transaction, IT technology, accounting records, user entity information system, financial reporting process, control surrounding journal entries, nothing but your SA 315. You need to apply SA 315. Then objectives that we understood, like obtain understanding and design and perform audit procedures of the user auditor. Once you have this, you need to understand what is type 1, type 2 report that we understood in detail. Same type 2 report. You have type 1 objectives over here, and you have a design over here for this, a description prepared by management. When it comes to type 2, same thing is there, but there is a operating effectiveness throughout the period. Same operating effectiveness throughout the period, and the description of test and results thereof. Type 2 report. Obtain the understanding by 315 that we discussed. Same, all these things. You have service, transaction, interaction, relationship, STIR. Then again, SA 315, you need to apply to obtain understanding of the internal controls. Determine whether user auditor, what services are necessary, what you need. If you are not able to obtain, simple, report then contact, visit another auditor. Then using type 1, type 2 report, when you are using, you need to understand competency and what standard was used to issue the report. Then you need to evaluate the description, appropriateness, complementary user control before placing and saying that it is a sufficient and appropriate audit evidence. And accordingly, you need to understand if you are using the report, then whether it is sufficient and appropriate audit evidence for you or not. If you say this is yes, sufficient and appropriate audit evidence by design, objective, okay, complementary user entity control, time period, okay, and test which is being performed, whether those are appropriate, then you can rely upon the type 2 report and you can say that it is sufficient and appropriate audit evidence. And then accordingly you can report if you identify any fraud, or if management says that you have identified any fraud, management has identified any fraud, then you can appropriately apply SA 240 and you need to see whether there is a fraud or there is non-compliance with laws and regulations at service organization. Same concept will be applicable. Okay, so this was your SA 402. Any doubt in SA 402? Any doubt? No? Okay. If no doubt, then please guys go through the chapter number 2 in detail. Solve questions which are given below. Okay, and practice that is necessary for you. Practice as much as possible. If no further doubts, then thank you guys. Thank you for participating in today's session. I will see you in the next session with the next chapter. But before that, we will take some questions from chapter number 2 as a quick revision for you guys. Okay?
Okay, sir. Thank you so much, sir, for your dedicated lecture.
Thank you. Thank you. Yes, Ashok ji.